I'm Myra Seha, and you're listening to Venture Unplugged. From deep tech crypto to direct-to-consumer brands and products, each week we dive in deep into the lives and challenges of today's most successful founders and investors. New episodes launch every Tuesday. Sign up for our newsletter at ventureunplugged.com and subscribe on iTunes or Spotify. Follow me on Twitter at MyraSeha007. I'm really excited about today's episode with Dave Heath, the co-founder of Bombas, a sock company with a social mission to provide socks to homeless shelters. We discuss how he bootstrapped his company to over $100 million in revenue, how his experience on Shark Tank fueled his company's growth, and what it's like to work with the famous entrepreneur and investor, Daymond John. This episode is brought to you by Qtum and AWS. Qtum is the first proof-of-stake smart contracts blockchain. It has been around for over 2 years and has over 4,000 nodes around the globe. If you're tired of paying high fees on other smart contract platforms, head over to qtum.org. That's QTUM.org and start building your own low-fee Solidity smart contract today. This podcast is co-presented by BlockWorks Group and Republic. BlockWorks Group is a blockchain events and media production company. For exclusive content and events that provide insight into the crypto and blockchain space, visit them at blockworksgroup.io. Republic is an investment platform that helps companies raise capital from retail investors. For more information, please visit republic.co. From Airbnb and Lyft to Slack and Twilio, the world's top startups build on AWS. AWS has helped hundreds of thousands of companies to build and scale their businesses. AWS has unparalleled insight into the unique needs that startups have and the opportunities that startups chase every day. For more information, go to aws.amazon.com/startups and follow on Twitter at AWS Startups. Have you ever wondered where the name Bombas comes from? The name Bombas comes from the Latin word for bumblebee. The co-founders David Heath and Randy Goldberg loved it because bees live in hives and work together to make the world a better place. The company logo is a bee, and the company mantra is Be Better. It is embroidered in every sock to help them remember to build a better company and a better product, and also to inspire the wearer to be better. Now, enjoy the show. Hi, Dave. Welcome to the show.
Thanks for having me.
I'm really excited to have you on the show today, not only because I'm a huge fan of your socks, but I think you've also made some unique key decisions in building your business that I'm sure our audience is very excited to learn from. So why don't we go ahead and get started? Take us back to the decision to launch Bombas.
The decision to launch Bombas, it's funny, this business, I think, found me rather than me finding it. I went to school for entrepreneurship. My dad's an entrepreneur, so I think I always knew very early on that I wanted to eventually start and run my own business. I think if you had asked me if it was going to be a socks-based apparel company, it would probably be the last thing that would probably come to my mind in those early days of what I would probably end up eventually doing. So it just goes to show you that you never know where you will find inspiration, for an idea. But I was working at an early stage media startup back in, I joined there in 2006. And the story is relevant because it's where I happened to meet one of my co-founders, Randy Goldberg. He joined as the 6th employee. I joined as the 7th. We started about a month apart from each other. And we became fast friends. And, over the years, we always talked about the idea of starting a business together. And we, ate lunch together and worked out together. And we'd always, share these ideas. And it was pretty much, I think it was like February 2011. I was scrolling on Facebook and I came across a post that said socks are the #1 most requested clothing item in homeless shelters. And I just remember thinking, I was like, man, that's pretty sad. Like something that I've never spent more than a few seconds a day thinking about could be perceived as a luxury item for somebody else. So I remember walking over to Randy's desk and I told him, I was like, did you realize that socks are the most requested clothing item in homeless shelters? And obviously he didn't, but I watched a similar kind of reaction on his face. He was like, man, that's pretty sad. He's like, so what can we do about this? And at first we just started carrying socks around in our bags, handing them out on our way to and from work here in New York, because we obviously encounter a fair amount of homeless people. And, around this similar time, we were obviously following other startups and entrepreneurs. And this was about Tom's was about in their fifth year of business and doing very well, and so they were keeping the story of One for One alive, and then Warby Parker had just launched about 6 months prior. And they were this new One for One eyewear company, and it was the first time someone had taken what Tom's has done with shoes and moved it over to another product category. And that's when we thought, well, if they can do it for shoes and they can do it for eyewear, why can't we do this for socks? And so ultimately, that's how the idea for Bombas was born.
And how do you think having a social mission associated with your business has impacted your business?
I mean, the impact has certainly been tremendous. I think it's incredibly hard to quantify because it's not a super tangible thing where we can track sales and we can track customer sentiment. But because our mission was so baked into the company from day one, it's in the DNA. It's the reason we started the company. It's never been separated. So everything that we've done has always been about pushing the mission forward. I'll say that, I tell this to every entrepreneur, especially socially conscious entrepreneurs, that you have to have a great product to begin with. So, it's we didn't ever decouple having a mission and just like some generic product. Like we spent 2 years on product development to create what we believe to be the most comfortable socks in the history of feet. And it just so happened that married with an incredible mission, has really contributed to our explosive growth. But I look back at certain moments like, I don't think we would ever been casted to be on Shark Tank if we didn't have a mission. I don't think we would have ever done a global, collaboration in all 3,500 stores of Gap stores across the world if we didn't have a mission. We wouldn't have done things with Sesame Street and Muhammad Ali. And, look at all of these other things that have been so rooted in the mission side of our business that never would have happened if we didn't have the mission there.
And how many socks have you donated to date?
We just crossed the 25 millionth pair milestone, which is really exciting. We've distributed, over the last 6 years, 25 million pairs to over 3,200 giving partners throughout the country, represented in all 50 states. Everything from, underprivileged youth to senior citizens. It's been really amazing.
You mentioned Shark Tank. Can you walk us through what was that experience like? Yeah.
So, the backstory there is that we actually launched the company in August of 2013 on the crowdfunding site Indiegogo. And we did this because we didn't want to place a large purchase order before really understanding what the demand was for our product. But we had set a goal of $15,000 and we ended up selling $150,000 in our first 30 days. And what I don't think a lot of people realize is actually the Shark Tank casting agents, they follow crowdfunding campaigns very closely and try to find things that have an interesting story, founders that present well on camera, but then also quantifiable success. And so, I guess they must have found our crowdfunding campaign because that following April, we received an email, from sharktankcasting@gmail.com. And at first I was like, oh, this sounds like one of those Nigerian prince emails where they want me to send them $500 million in order to, be on the show or something. But no, it turned out to be true. And they were like, we saw your Indiegogo campaign. We loved it. Would you guys consider being on the show? And we're like, yeah, of course. It's why, of course who would turn this opportunity down? And so we went through the entire casting process and ultimately ended up filming in June, and they aired our episode on the season premiere in September 2014.
What surprised you the most about that experience? And were there any funny stories you can share with our audience?
So what surprised me the most is the demand that came after our show aired. I mean, everybody always talks about the Shark Tank effect, but it blew all of our expectations out of the water. I mean, in the first 13 months of our business, we've done 900,000 in sales. And then the 2 months following Shark Tank, we did, close to 1.5 million in sales. And then we sold out of all of our products. So who knows how much more we could have done. So that, I mean, it sounds unsurprising to people, but still completely took us by surprise, the amount of volume that show actually generates. As far as a funny story, if you the moment that we get a deal, Daymond John comes up and gives, each me and Randy a hug. And if you go and slow down frame by frame, you could see that actually when Randy goes to give Daymond a hug, he actually like punches me in the face as a result of it. So you see like my face like move to the side as he's like giving me a hug, but it's a little Easter egg in there for you.
He was just excited. That's great. That's awesome. And talk to us about Daymond John. What is it like to work with him? What have been the best pieces of advice he's given you?
I mean, to start off, when you're basically 4 co-founders, no experience in the apparel industry whatsoever, and you're kind of just like figuring it out along the way, to have somebody who's built, a multi-billion-dollar brand, literally in your cell phone where you can text or call and get kind of immediate response from him. It's just invaluable. I mean, it's just, and he's here in New York, and, we get together, often and talk. And, I think he's been equally as impressed in how we've scaled our business, on the digital side, because when he was building Fubu, direct to consumer was not a thing. Or I should say digital direct to consumer was not a thing. So, it's been a really awesome relationship. We've really enjoyed working together. As far as advice, I think, once we saw some really early traction online, following the airing of the episode, in like year 2 or year 3, we were talking about doing a real strong push into wholesale. And he sat us down and he was like, guys, it's like, you have a business that's growing 300% year over year in a direct channel where you're profitable, like growth is not slowing down. You're like absolutely killing it. Like, don't add complexity to your business by going to chase something that's lower margin, more complicated. You have to operate your business entirely differently. So the idea around focusing just on the one thing that we were really good at early days, I think helped us keep our eye on the prize and flawlessly execute the way that we did.
That's brilliant. And that's such great advice, because I do think when you're launching a business, it's so easy to get distracted and try to accomplish more than you can, chew at one bite at a time. So over the years, what do you describe as the most challenging experiences for you, maybe even at various stages, maybe looking at it just launching and then now when you're in full growth mode?
Yeah, I mean, certainly the biggest challenges, I think, early days is trying to plan and predict things, right? Because you have no basis by which to go off of anything, right? And you look at, we've never had an April before, so how do we perform in April? We've never had a holiday season, so how do we perform in holiday? And even as you get 1 year and 2 years under your belt, when you're small, like a thing like SharkTank automatically throws an anomaly into the situation that, who knows what the data is going to be like going forward. So planning, particularly doing financial forecasting and then buying inventory against said financial forecast. In the early days, I mean, you might as well just throw darts at a dartboard. It is so impossible, and for the first 5 years, I mean, literally up until last year, we underbought inventory every single year because we were like, well, we had that thing happen last year, and that was the anomaly that contributed to our success. I mean, we never kept expecting the growth to continue at the rate that it did, and then, of course, we didn't. We're trying to manage cash flow along the way. So we obviously didn't want to like overbuy too much inventory and then just be sitting on a bunch of stuff. So early days, the most difficult challenge is certainly, just trying to plan against a business that you have no metrics to plan against. As far as the other stages, in the kind of middle years, again, we're not that old, but, we're only 6 years old, but I'd say in kind of like year 3 and 4, things are a little bit more established. Thinking about building out team starts to become really challenging. The layering in of like, okay, well, if I hire this person, then I'm going to need this person to support them, or what impact are they going to have on the other departments? And are they going to require additional resources? Or, we may not need this person today, but we need their impact 6 to 12 months from now, which actually means that we need to hire them today. Like there's all of this like planning that goes into the middle part of the years in terms of especially team growth. And again, we got that really wrong. We came into the beginning of this year as a business that just did $100 million with a team of 50, and everyone was like pulling their hair out because they're just like fried because they're like trying to do so much. And we'd always been trying to bootstrap and keep things super lean and efficient. And then we kind of did that to such a large degree that we were super understaffed, and we ended up having to do a huge hiring push where we brought on 80 people this year. And so now we're a team of 130 from a team that was where 70% of the company has been here less than a year is like kind of a crazy concept. And so that's been challenging. And then I would also say, like, at the phase that we're in now, one of the challenges that's keeping me up at night is moving from a super agile, take every opportunity that comes your way startup mentality to a much more planned, methodical, we're going to choose our growth target for next year and just be really diligent about it. Because, we sit at the beginning of the year and we're like, okay, well, the base case of what we're going to do next year is 50% year over year growth, but the high case is 125% year over year growth. Like, it's impossible to plan 130 people and budgets and all these other things on a range that like spans, 80 to $100 million of revenue and, cost implication, profitable implications of, 10 to $40 million of, cash at the end of the year. So I think the big shift for us now is really trying to think about how do we choose a very, a much longer term growth target where we're saying, okay, we're going to stick to 35% growth next year and then 35, to keep just chugging away the way that kind of public companies operate or larger companies operate. Because you need to know, you have to have something that you can set a plan into.
Now for a quick word about our sponsors, and we'll be right back. In addition to being one of the best smart contracts blockchain in the world, with extremely low fees and easy-to-use platform, Qtum's proof-of-stake system lets anyone stake with as little as a fraction of a Qtum. To learn more and start building today, go to qtum.org. Whether it's solving a technical challenge, hiring the right engineers, or finalizing a fundraising round, AWS has the experience you need to get started. There's a reason more startups build on AWS than any other provider. They're here to help you succeed from inception through to IPO. For more information, go to aws.amazon.com/startups and follow on Twitter at AWS Startups. And you've shied away a little bit from taking venture capital money. What was your thinking behind that?
The funny thing is I don't know if it was entirely my choice. I met with all of the, I met with every single kind of, named VC in the early days, the General Catalyst and the first rounds and, all the rest of them. The thing is when I went in to pitch them, I think the reason that they ultimately didn't invest in me is because I think I was a little bit more realistic about my business than what they wanted to hear. So, VCs are typically, a lot of the VCs that are active these days, were born out of tech venture investing, which, value can be created rapidly. Whereas I think with consumer brands, it takes time to build a brand. It takes time to develop product. It takes time to figure out supply chain and warehousing. And, great brands are not built overnight, although certainly there are some cases in which it looks that way. But, when I went in to pitch them, I was like, look, we're conservatively targeting in a 5-year period that we're going to do $30 million of revenue. And based on my comp knowledge of the marketplace, we could sell that business for anywhere from 2 to 3 times, forward-looking revenue, and, enter today at, call it a $5 million seed round. And, we could potentially exit this business for $60 to $100 million in the next 5 years. And the fact that I wasn't mentioning the B word in terms of like building $1 billion brand, they were just like, oh, that's cute. That's like, that's cute. Even though it's a nice little small business. I'm like, I don't know about you, but like I have never met anybody who's selling a business for $100 million. And if I did, I'm sure they wouldn't be like, well, yeah, really, really sold myself short there. So, I didn't want to raise a ton of capital. I wanted to do it very methodically. I wanted to be really, thoughtful about valuation and comping it again against, what I was seeing in the marketplace. So, it never made sense to me that in an industry where, on the exit multiples are 2 to 3 times revenue, how you could ever raise at a 10 times revenue multiple. Like at some point, someone is going to get compressed in that equation, right? Like, and what I don't think a lot of entrepreneurs realize is that by taking that 10 times revenue multiple, all you are doing is setting an extremely high bar for yourself and your team that you then have to accomplish with whatever little funds that you get in your fundraise. So yes, you take less dilution, but ultimately you make your job so much harder. And then, it's always the people, it's always the founders and the employees that ultimately at the end of the day, if you don't meet your requirements, you're the ones who get left holding the bag. Like, if you have to sell for, a down round or anything, like the investors will always take their money out first before you get $1. So you have stories like the Gilt Group founders, at one point the brand was valued at $1 billion, ended up selling for $250 million to Hudson Bay Company, which again, I don't think anybody who sells a $250 million business should be like upset, but the way that they structured it on the capital side, all the founders and employees walked away with zero. They made no money. Like, and that to me is like really sad. So I never wanted to be put in that position. So, being rejected by the VCs early on, made me forced me to turn to, angel investors who, my comp for them was the stock market or, whatever they could, whatever bar that I was trying to clear from an investment standpoint in their portfolio. And they were happy with, 25+% year-over-year returns. So, I ended up raising, $1 million from seed and from angel investors for our seed round, and then $3 million from basically the same group of people in our Series A, and then didn't raise any more money after that. We've been profitable every single year.
That's a very insightful story, and I really want to thank you for sharing that, because I think a lot of founders don't fully think through the multiple rounds and what that means for their equity stake and what founder dilution means when you start taking VC money and start setting valuations really high. So I think that, is very insightful for our audience.
I mean, and on that point, I think one of the most important factors that gets lost in venture or like in the world of entrepreneurs looking to raise venture capital is like I don't think a lot of them do the hard work to realize that, like, especially in consumer, I mean, look, consumer businesses, like the reason they work is you buy a product for X, you sell it for Y, and you operate off of the margin in between. Like it's not like, oh, we have some crazy tech platform that, at scale, once it's plugged into Google's network, automatically becomes super, super valuable. And all we need to do is get to the point of acquisition. Like, consumer businesses should make money. And if they don't make money, something's wrong with your business. So you shouldn't need to raise a lot of capital. The only way you should be raising capital is honestly to just fuel the growth factor of your business, but it shouldn't compromise your unit economics. Like, I think so many people go out and raise capital as a masquerade for bad unit economics. And they're like, well, we just need more money and then we'll figure it out. It's like, dude, figure it out today and then you won't have to worry about blowing $50 million and then trying to become profitable later. It's like, start out. Why don't it's like a crazy idea to like start out with trying to be profitable early.
I could not agree with you more. And particularly when it comes to consumer, I think that the metrics, and even for investment, I think they're pretty black and white. What is your customer acquisition? What's the margin? And how quickly can you scale that? What happens is that when you take on VC money, it can distract you, right? And even cause greater problems. Over the years, you've had to deal with a lot of customers. Has there been anything that has surprised you about them? Tell some fun facts about socks.
Yeah. I mean, first of all, I think one of the things that surprised us the most, and I think has contributed a large part to our under projection of growth over the years, is just how many socks people consume in a year. I mean, we have a highly giftable item, so we know that so much of our Q4 revenue and the increase in AOV and the cart size is due to the fact that people don't buy 38 pairs of socks for themselves. But we thought, maybe people will come and buy, 2 pairs at a time type of thing. And what we're seeing is actually the majority of our customers are buying 8, 12 pairs at a time. And they're doing this, at least once a year, which so the volume for us has been super surprising. I think the other thing that's been surprising for us too, and I think every entrepreneur will go through this, is particularly in early stage, consumer businesses where something will inevitably go wrong. You'll find out that you shipped a bad product after you've already shipped it. Or that there's quality control issues, or your warehouse messes up a bunch and packages are delayed by 2 weeks, or they're a high degree of mispicks in terms of the order accuracy. And the thing that always surprises me about customers is how resilient they actually are if you provide them with good service. The ability to win them back is actually not that hard. All you have to do is kind of be honest and lead with doing the right thing first. So I remember the story last year. We had, again, underprojected, our holiday season by 30%, which in our peak volume could mean the difference of 10 to 20,000 orders a day. And our warehouse got crushed. They absolutely, we didn't plan for it. They fell 7 days behind in terms of shipping orders. And then as a result, our customer service department, got so overwhelmed in terms of people reaching out. And then they were 7 days behind on even responding to tickets. And so, we just did the right thing. We sent a mass email out to everybody, and we were like, it was 15,000 customers. We're like, we're not going to be able to get to your request. We're super underwater. We've refunded your entire order, and here's a gift card for the same dollar amount. We hope you'll come back and try us again. And the response that we got from people was just incredible. And I think when we look at that cohort of a customer, we see they have a 2 times lifetime value than our current customer, like any other customer base. And we royally, it started off by us royally messing up, but we did the right thing and we won them back.
That's a great lesson about doing the right thing and the ability to turn things around rather quickly when you choose to take action rather than just shying away from the problem.
And I have to quantify this in some way. I mean, this was a $3.5 million decision.
Wow.
This wasn't it's going to cost us $100,000.
Yeah.
And we didn't spend that much time deliberating on it. We're like, this is the right thing to do. Let's just do it.
Do you think those decisions are a lot easier because you don't have a board to report to? Do you think they would have been harder?
Well, I do have a board to report to now. We did a private equity deal last year, and our partners have been amazing. But no, I mean, we could spend a whole topic talking about choosing the right private equity partner, or any partner for that matter. But we did our diligence and found the right partner. And, when I told them, I was like, hey, we're going to do this, they were like, that is 100% the right thing you should do. So, I mean, I'm sure in other instances, if you disagree with your partner, maybe it wouldn't be as easy. But again, it's just about, hiring the right people. It's around surrounding yourself with the people that you think share the same core values as you do. And that shouldn't change with your investors.
What is one lesson that you learned the hard way that you wish you would have learned earlier?
I think one of the hardest lessons that I've learned is that, even when you have, a number of great years and the business is cranking and doing well, not to get too comfortable or confident, because, despite the fact that our business is continuing to grow like crazy, we just ingested 80 people this year, and there's a lot of frustration and friction, and we're trying to implement process, and we're moving from being kind of this small agile startup to being a much more professionalized organization. And in some ways, even though the core business has been it feels more rock solid than ever, I think this has been one of the most stressful and difficult years for me, in trying to evolve as a leader, because, the happy-go-lucky early days of we're one small tight-knit family and everybody loves each other, is evolving where we're still, trying to cultivate that culture. And I think we do an incredible job of that. But now we've got 80 new people that we've got to show the way of how we do things at Bombas, and, but also give them space and room to bring new ideas to the table. And that's probably been one of the things that surprised me the most in terms of a challenge.
So Bombas is known for super incredible socks. Do you have any plans for any new product categories in the near future?
Actually, yes. So this year, we actually back in March launched Bombas t-shirts. So made of super, super soft Peruvian Pima cotton. And then a couple of weeks ago, we just launched sweatpants and sweatshirts. We have a number of other product categories in the mix coming over the next few years. Excited to bring the brand internationally, and then eventually open up some Bombas retail stores as well. I think when we look at brands like Nike and Lululemon, the way that Nike does run clubs and Lululemon does yoga lessons in their stores, we look at bringing, our mission and community aspect to our retail stores. So, giving the homeless community an opportunity to shop in an actual store a couple hours during the week, where they can come and get the items that they need. Seems super exciting.
Now, before we jump into rapid fire questions, I want to end on a happy note with one of my favorite questions. When was your last moment of peak happiness?
Oh, I have moments of peak happiness every day. I look around my office and, I see the interactions between people. I see employees growing and, from junior people to managers for the first time. I look at just aspects of my life. I wake up every morning and I meditate. I'm so grateful for that time. And, I have an amazing family and I've got unbelievable friends. And I don't think there's very rarely is there a day that goes by that I don't experience at least one moment of peak happiness.
That's terrific. Are you ready to jump into rapid fire questions?
Let's do it.
All right. How much do you sleep?
8 hours.
What is your favorite book that you would recommend for founders?
Definitely Rework by David Hansen and Jason Fried.
What's your biggest life hack?
Meditation.
What's one piece of advice that you would have for founders just getting started?
Stay focused.
If you could time travel backwards or forwards, where would you go and why?
I would go back to the 50s. I love Motown music. I love the idea of Americana at that time.
Do you believe in God?
I believe in a higher power. I don't know what it is called.
Do you believe you're lucky?
Very.
AI, scary or exciting?
Both.
Who are founders you admire?
Blake Mycoskie and Reid Hoffman.
What is one thing that you believe in that most people don't?
Energy fields.
Would you travel to Mars or the moon?
Moon.
What is the most significant thing you got from a mentor?
Confidence.
What is the first thing you do when you feel demotivated?
Go for a walk.
What's the biggest drain on your energy?
Negative people.
One word to describe high school Dave.
Unsure.
What is your superpower?
Empathy.
What do you want to be remembered for?
Being a great leader.
Thanks so much for listening to that episode. New episodes launch every Tuesday at 7 a.m. Eastern Standard Time. If you want to continue the conversation, you can find me on Twitter at MyraSeha007. And I'll see you next time.